This week has been a good week so far, and the main highlight of today's management will be the Apple LEAP calendar spread, as well as the JPM dividend capture strategy. But before we get into that, let's take a look at the new additions to the options portfolio. Earlier this week, I've added another Yum China call expiring on the 20th of November. So this is a 25.5 strike put that I've sold for a premium of $2.35. I sell these way ahead of time because I saw that the current one that I have running that's going to expire on the 16th of October, the 50 strike put, it is highly likely going to expire worthless. So this is why UMC, the 50 strike is over here and the 52.5 strike is somewhere around here. So I saw the 52.5 strike when I saw this candle breaking above the level and also breaking above these two EMA over here. And then I saw that it is quite a distance away from the 50 level. So that tells me that it is likely going to expire worthless in 2 weeks time. And that was what led me to sell another put when prices was near the 52.5 level, somewhere around here. As usual, if you like what you are seeing in the options portfolio management video, do show your support by smashing the like button and subscribing to the channel. Your luck and support is going to be a huge motivational support for me in creating more educational content for you guys. Let me know in the comments below, what do you think of the management style so far? Let us take a look at what's installed for us today. Expiring today, the 9th of October, are the Apple call, the BAC put, as well as the JPM call, part of the dividend capture strategy. So let's first talk about Apple. Last week, I have sold a 116.25 call for Apple to collect more premium to finance my LEAP call that I own over here at a price of 25.91. So what is Apple trading at? Apple is right now at 116.25, just very near the mark at our strike price level. It is currently going for 34 cents. So taking my trade price into consideration, we have collected essentially about $1.30 of premium. So let's take a look at the chart and see what we can do for this trade. So for this week, Apple has been trading in somewhat of a very narrow range or consolidation between the 112 level to the 116.5 level. And previous week, it has reached a high of about 117.8. So let's look at our option chain and see how much premium we can get for the respective ruling. I want to buy back the call that I've sold. And then let's look at next week's expiration, 16th of October, expiring in 7 days. So either we can sell the 117 strike or we can be more generous and sell the 117.5 strike. Anyway, the difference in premium is not that much, just a 20 cents difference between these two strike prices. And in fact, we can even go further down, 118, and we can still collect a premium of 193, no 192. The premium collected will be more than enough for us to buy one share at 118, right? So the premium is definitely very rich for Apple. If you check back, their earnings is on the 29th of October. So surprising that the 16th October expiry is having a rather high volatility for some reason that I'm not very sure of. But nonetheless, that's not going to affect our decision making, all right? So after buying back my sold call and looking at the charts, 118 will be somewhere around here above the high of last week. All right, since it is being supported by the 20 EMA, I think further downside is going to be unlikely and more upside is likely to come. So I'm going to be more generous and then I'm just going to sell the 118 strike. And for this, we'll get to collect another $1.60 in terms of premium. And this will go into offsetting our long-term LEAP call. All right, so confirm and send. And let's wait for it to get filled. Next up, we have the BAC put that I've sold as part of the wheel strategy. So BAC is currently trading at $25.40, quite far away from the 25 strike. So it is rather safe and unlikely for BAC to drop 40 cents overnight in the last 2 hours of the market and then we get a sign, right? So I'm just going to leave it to expire. And if it does drop and we get a sign, then so be it. I'll be more than happy to take up the shares. Finally, we have our JPM dividend capture strategy. Last week, we sold a 98.5 call and collected a premium of 112. So for the entire of this week, the banks have been rallying very strongly. Right, prices have been going up non-stop ever since the start of the week. This is a chart for JPM. So this is the start of the week. So essentially on Monday, I've collected 90 cents worth of dividends per share from JPM. And 100 shares, I have gotten $90 in terms of premium, not accounting for withholding taxes yet. And what's more, these dividends are basically given to me for free. Why? Because after giving dividends, collecting 90 cents from the stock, prices still gap up and move up strongly on that day itself. And for the entire week, prices have been on a very sharp rise. Prices have already broke through all the moving averages, so it is safe to say that these levels should now act as support for the prices. JPM is currently trading at $101.10. So it is way above the strike price of the call that I've sold at 98.5. If we leave it till the end of the day, it is going to get a sign. So my 100 shares will be sold at $98.50. And it doesn't matter to me because I've bought these 100 shares at only a price of $98.10. So net net, I still gain a profit of 40 cents from the sale of the stock, $1.12 collected from the premium, and this is in addition to the 90 cents of dividends collected. Alright, so if you are trading this strategy, you can wait till the end of the day for it to get automatically assigned for you. But personally for me, I'm going to close them out individually and manually. I do not want to wait till the end of the day for it to get automatically assigned, as I want to avoid any unnecessary risks. Alright, so very simply, I'm just going to right click on this and create closing order. Buy 1 JPM at $2.65 of limit. I'm going to adjust this. Market price is at 57, so let's just go for 57 or 58. All right, since it dropped, I'm going to go down 1 cent less. All right, and then we are buying back to cover. And at the same time, very quickly, I'm going to sell off my 100 shares of JPM. Create closing order again, sell at a limit price of JPM is currently going for 101.05 to 101.07. So you can just set at the limit price as it seems like it's going up. So let's just be slightly greedy and then we can always change our price later. Okay, it's failed. Attractive strategy, isn't it? I'll do my best to upload the full strategy video explaining every step in detail. And meanwhile, I'll appreciate it so much if you can show your support by smashing the like button. And if you're wondering what's next for the dividend capture strategy, up on my list, I'm eyeing AbbVie, ticker symbol ABBV. So this is the stock chart. And for this company, it is giving dividends, $1.18 worth of dividends on the 14th of October. Stock price is currently trading at $87 to $88. With a dividend of $1.18, it is more than 1% of the stock price. It is giving dividends every quarter. So the dividend yield of this stock is definitely very attractive. And what's more, AbbVie is a fundamentally strong company. If you were to apply the value investing criteria to this company, you will find that it passes most of the steps. This is a long-term monthly chart. You can see that prices have been on a very beautiful uptrend, only recently consolidating between the $100 to about $65, right? So to me, this is definitely a stock worth owning for my long-term value investing portfolio. And what I'll be doing as part of the strategy will be to own 100 shares next week, anytime before the 14th of October, which is a Wednesday. Right, so I have Monday or Tuesday to monitor stock prices and then accumulate my 100 shares. What I want to see is ideally prices could move down to form another low and also show a support by bouncing off this small little support over here. If we can do that between Monday and Tuesday, I'll definitely scoop up 100 shares. Otherwise, if it breaks the EMA resistance over here, I'll also get 100 shares as quickly as I can. After getting the shares, I'll be selling another covered call to protect my downside a little bit. Alright, so you'll get to see the management of this strategy in next week's video. So definitely stay tuned to it. Alright, and despite all that we have done, the rolling of our short Apple call is still not filled yet. Right, so let's take a look at what is the limit price right now. Okay, so Apple is slightly above our strike price now at 116.3 something. Price of our rolling order is now at $1.58. So I'm just going to click confirm and send at this updated price. The bid-ask spread is pretty narrow, so it shouldn't take such a long time to get filled. I'm going to go for below market then to just get it filled up. Alright, and it's done. Alright, so here you have it. Apple, 16 October 118 call, sold for a premium of $1.92. And that will expire next week, 16th of October. In addition to that, we have two other BAC options, one 25 strike call and another 25 strike put. We'll see how that goes as the next week progresses. Followed by Yum China, 50 strike put. This is likely going to expire worthless, as I've mentioned previously. And in addition to that will be our AbbVie dividend capture if everything went according to plan. Let's take a look at my total BAC positions right now. These are all of them. So how many cash secured puts do I have right now? This is going to expire, so let's ignore that. And then we have another one next week. 1, 2, 3, 4. And then this is 2, so we have 5. So we have 5 positions of BAC currently running and ongoing. Okay, so since we have only 5 running currently, I'm going to go ahead and put up one more. So this is BAC. It is currently just above the 50 moving average. And just like JPM, it has been rallying rather strongly for this week. Earnings is coming up next week on the 14th of October. So the put that we are going to sell is going to be quite far away from that, and it should be fine. All right, and if you take a look at the option chain, the one that's closest to 30 days to expiration will be the 6th November. And for that, we have the 25 and 24.5 strike that is currently out of the money or at the money. Let's calculate the premium given by the 24.5 strike put. It is currently going at 69 cents to 77 cents. So let's say 75 cents divided by 24.5 strike. So there is still a 3% premium yield over a time period of a month. And 24.5 is somewhere over here below these moving averages. Since prices has been moving back and forth between these moving averages as if they are not there, this really diminishes the importance of these moving averages for the short term. And in fact, from what I'm seeing from the price action of Bank of America, it is more likely to be in a consolidation between these two boundaries, 26.5 and 22.5 to the $23 level. So selling a 24.5 strike put will be somewhere in the middle of this channel, and that'll be fine for me. So let's go ahead and sell it at 75, and hopefully we'll get filled on this. It's going to take a while. And remember that whatever actions that we take today by selling options that expire in the future, we are setting the portfolio up for a continuous stream of income that will come flowing in next week or next week or a month later. Alright, so keep this in mind. The actions that you take today will be the results that you sow in the future. With that, I'll leave this trade hanging and then I'll update you guys next week. Let's pay some attention to our EM 44.5 strike call that we have sold earlier back. This call option is going to expire on the 23rd of October. I've sold it for 72 cents. And right now EM is going for 45.82. So the call option that I've sold is quite deep into the money. Let's take a look at the charts. On the daily chart of EM, prices have rallied very strongly over the past 2 weeks or so. This is the call option that I've sold. It is currently going for 1.53 to 1.58 with a delta of 0.78. So if you have went through my wheel strategy tutorial, you should have recalled me saying that once our sold call reaches a delta of 0.8, which is very close now, we should roll it out and up forward, right? So that's what I'm going to do right now, but with a slight tweak. I'm going to buy back this option, and then I'm going to look at another one that's 30 days away from expiry. So the closest one will be the 6th November. For this, it is 28 days to expiration. Instead of rolling out to an option that is at the money, that will be the 46 strike, and collecting a premium of $1. If I do that, I'll have to pay a price of $54 or 54 cents per contract for this rolling. Now I want to avoid as much as possible to pay a premium for rolling, and I want to always collect if possible. Instead of rolling to the 46 strike, what I'm going to look at is the 45 strike instead. And this is currently going for 160 to 164. So if we change this 46 down to 45, so we still get to collect a measly premium of 6 cents or $6, just enough to cover and offset the cost of the commissions. That's not so important. What's more important is that I've managed to shift up the strike price of my sold call from 44.5 right now to 45. In that sense, it is easier to expire once EM starts correcting back down to the moving averages or the support over here at 44.87. Alright, so that's what I'm going to do. And meanwhile, we can see that I have also another position, a sold call at 45.5 strike. Right, so this call, I've sold it earlier this week as well for a premium of 96 cents. In addition to that, I've also sold the FXI covered call at a strike of 43.5, expiring the same date on the 6th of November. Right, so I've collected a 70 cents premium for this, and currently right now it is also slightly in the money
43.5, and FXI is trading at 43.2. Going to get into the money very soon. Okay, so just a small correction that I'd like to make is that these three options are the additions since last week instead of just Yum China alone. So that's my mistake on that, as it slipped off my mind. 6 cents is not getting filled, so let's go for slightly lower, just 5 cents. And since the bid-ask spread is slightly wider, about 5 cents apart, we might have to go lower in order to get a quick fill. Right, and there you have it.
Thank you so much for watching, and I hope you have gained some insights for the better management of your own options portfolio. If you'd like to be more involved with the growing wealth community for more active discussion and sharing of trade ideas, enter this link to get into our Telegram chat. Remember to like and subscribe, and I'll see you in the next video.